Welcome back to the channel, everybody. My name is Paul, and in today's video, we're going to be going over a 5-minute scalping strategy that allow me to capitalize just over 100 pips in profit. And as we do with all of our videos, we're going to share with you our live trade entries, results, and more importantly, break down the rules and setups that we look for identifying accurate trade entries. Like and subscribe if you enjoyed today's video and gain any value. If you have any questions, reach out anytime, comment down below, or you can also message me directly either via email or Telegram. You can access all of my official contact information down below in the video description. While you're down there, don't forget to check out our valuable trading resources provided, ranging from links to free demo accounts, brokers, prop firms that I personally use for trading the gold markets, including exclusive offers, access to our trading community, automation, much more. Again, all of that can be found down below. So we're actually going to be going over 3 different entries following this 5-minute scalping strategy. We're going to break down each one of these trades to show you where and why we entered in these markets. Starting off with a buy entry we had taken at 30.27. Why did we take a buy in this area of the market? This is a very important question you need to be able to answer before you take the trade. If you can't, if you have doubts, you're not sure, then you need to step back and wait until you have more clarity. As you can see, the overall structure is bullish. We have upside move, consolidation, followed by another upside move, bringing us to our current point of entry. Since the overall structure is bullish, we're looking for buy trade entries. So we have higher high, higher low, higher high, higher low, new higher high, and then we have a retracement. As a buyer, you don't want to buy when the price is high. You want to buy when price retraces at lower levels for a discount. So this would have been an opportune area for a buy. This would have been an opportune area for a buy. And now we have another possible opportune area for a buy. But one of the things I love about trend trading, in a lot of cases, whenever price retraces, a recent higher high created a level of resistance that is now serving as support. So because price respected this zone, we entered for our first position at 30.27. By the way, this is a prime example of how you want to enter your trades when price pulls back to your key zone. We talk about this in our market structure and trend trading masterclass videos. So if you haven't seen those yet, highly recommend it. I'll leave the links to those videos down below. As this trade plays out, this is where I scaled a second entry at 30.35 for the fact that we had a clear breakup structure of our most recent higher high. Now, I want to just briefly interject here for a moment to show you these 2 setups we're currently going over right now are setups that I have personally called for our students and members within our VIP. I like to show this for a couple of reasons. For one, not only are these trades that I personally take, but they're also trades that we call out for our students and members to profit from. As you can see here, for our first entry that was called out at 8:03, we called to buy between 25 and 27. At 8:03 was in the midst of this candle where price was already at 30.30. In other words, we waited for the retracement to come back between 27 and 25, which was in the midst of this candle, correlated with the bounce of this support that was prior resistance. So as price shot up from this entry, we called out for another buy between 30.31 and 30.33 as a result of price breaking above the most recent high. And you can also see our stop loss levels for these 2 buy entries are below this support. So as our trades are fluctuating, we now have price coming back down to our original entry. This right here is a pivotal point for our entries. Since price is now coming back down to our zone, we need to see if price is going to respect and hold that level or break through. We're after the retracement. We are now given indecision candle. Since price respected the zone, this is where our third entry came into play, where we called to buy between 30.27, 30.28 right here in the zone. And as you're about to see, we ended up setting all 3 of our take profit targets at 30.40 flat. As we held on to these trades, price came back down, consolidated for a bit, but never broke our structure until eventually price hit our initial take profit target at 30.40, allowing us to capitalize 70 pips from our higher entry and over 100 pips from our lower buys. Now, as you can see, price did hit higher levels of 30.45 before coming back down and breaking our structure, but not before allowing our students and members to capitalize over 150 pips in profit from these 3 positions. So now let's break everything down in simplest steps so that way you can see why we took and held onto these trades. First and foremost, the overall structure is bullish. On the 5-minute time frame, we could see a clear level of bullish structure where we took our first buy as a result of price retesting what was a prior level of resistance, now serving as support. As price rose and broke above prior structure, we ended up scaling a second entry, and as price retraced back to our main zone, we took a third buy entry. Why do we take this third buy entry? For the fact that price came back down to our key level and respected this zone as support. Since price never violated our key level, we held onto this trade where eventually our take profit target was hit at 30.40 flat, allowing us to capitalize over 100 pips just by scalping on a 5-minute time frame, generating a substantial profit. Now, going back to our main question, why do we take these buys in the first place? I want to just add one final factor, and that is the RSI. Market's creating bullish structure, the RSI is creating bear structure. When you combine your points of entries at key levels of support, in addition to bullish divergence, just adds another level of confluence to your analysis. Trading is all about probabilities. The more confluences you have, the higher the probabilities of those trades will go in your favor. This is one of many things I teach in our community for beginners and struggling traders who want to improve in their trading skills, while at the same time accessing specific strategies that I use for trading these markets. And of course, if you're also interested in accessing our VIP signals group, where you can follow and copy my own personal trades, again, all that information can be found down below.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.